Welcome back, Aluxers. No, this isn't another spammy video telling you we'll help you become a millionaire if you set up a day trading account. If anything, we'll tell you pretty much the opposite. With more and more trading apps making it possible to trade with a few swipes of your phone, it looks like day trading is fast becoming the new way of earning money from home, making all your financial worries go away and pretty much promising you the world and then some. Are you really going to believe all of that? Well, we've done our homework and we'll help spell it out for you. Welcome to alux.com, the place where future billionaires come to get inspired. If you're not subscribed yet, you're missing out. Number 1. Day trading is completely different from investing. Investing means getting behind something you think has potential, sticking with it, and hopefully watching it grow. Day trading is not that. Day trading is a type of swing trading, making short-term trades on stocks, commodities, or currencies, betting on the price going either up or down in that narrow time frame. And well done, genius, you figured out from the name that day trading is the fastest kind of swing trading, opening and closing the trade on the same day. Doesn't quite fit the definition of investing, and many of the world's greatest investors agree, like Warren Buffett and Shark Tank host Kevin O'Leary, who says, "Day trading is not investing. Day trading is gambling. Nothing wrong with it, nothing wrong with Las Vegas either, but it's not investing." Number 2. It's high risk. You have a shot at making a nice pile of cash in the short term, but unless you've got a lot of experience, it's not a very good chance at all. With investing, if you have a solid reason to believe an asset has a good medium to long-term prospect, and if you've done your homework, then you have a good shot at it. But betting on which way the market's going to move over a few hours or minutes, that's a pretty tough call. Don't believe us? Just spend half an hour watching markets of a stock website and see how unpredictable their short-term movements are. No surprise then that 97% of people who get into day trading end up losing money. So be aware, the odds are stacked against you pretty heavily. Number 3. Many successful day traders work for large institutions. But Alux, somebody's gotta be making money from it, right? Or else it wouldn't be a thing. Well, true, some do make a lot of money out of it, but let's take a look at who they are. A lot of them are professional traders at large institutions, like insurance or pension companies, or high net worth individuals who invested a lot in trading, hardware, and software. And they have quite a few aces up their sleeve that the average trader doesn't, like a pro trading desk, which does trades in split seconds, important when markets are moving that fast. Real-time access to market data, huge amounts of capital, analytical tools to crunch numbers and find the best opportunities. And with all of these things working for them, even the pros have bad days too. Number 4. It's a zero-sum game. Here's another way day trading is different from long-term investing. Let's compare it with index funds or even individual stocks. With these, a large number of investors can make solid gains over a period of time. In day trading, it's different. One person wins, another loses. When you bet on the market going up or down, somebody's getting it right and comes out in profit. Somebody else bets the other way and loses. Sounds like a 50-50 chance. Factor in timing it right, playing trading fees, and taking leverage into account. We'll get into that later. And it's a lot worse than a 50-50 chance. Sure, you'll get lucky on a trade here and there, but most people can't keep up with it for very long. And surprise, surprise, it's nearly always the big boys and girls from the institutions or experienced investors who make all of the gains. Number 5. More people than ever are doing it. What's happening right now is there are more and more online brokers, like Robinhood or eToro, that let you trade from your smartphone and make it easy for anyone to trade. For long-term trades, they're reasonable options, but think you can be a casual day trader on them? It's probably not going to end well. The pandemic has meant more people working from home, more people with financial problems looking for a quick fix. More people just plain bored, who finished all the games on their console and figure they'll try eToro next. According to the Wall Street Journal, Robinhood got a record 3 million accounts in the first quarter of 2020, and others have been seeing the same kinds of figures. But try doing this when you have money problems and you're almost certain to be digging yourself in deeper. Number 6. There are more get-rich-quick schemes and scams. So it's easier than ever to get a trading account, and there's big bucks involved. Put those together and what do you get? Yep, your Facebook feed filled with scammers telling you how you can make $1 million in a few months. People selling courses that guarantee success, as if there's such a thing as guaranteed success in day trading. People who say they'll trade for you or give you mostly accurate trading signals. If they were that accurate, why don't they just trade themselves and earn their millions that way? And the trading platforms are getting in on it too, who are making it look like it's easy. They need people to set up accounts, and making day trading look easy is one of the ways of reeling you in. Before you sign up and get trading, be aware of the realities and what you have to do to have a chance of making it work. Speaking of, number 7. To make it work, you need to be fully invested in it. True, besides the institutions, there are a small number of individual investors who make it work, but there are some checks you need to do first, which the scammers always forget to tell you about. First, realize you need to be fully invested in it. Think you can do a few day trades on the side and watch the markets on your phone while you're doing your main job? Nah, that's not gonna cut it. Do it part-time in the evenings? The fact is, you'll need your eyes glued to the screen or a number of different screens for as long as the markets are open, if you want any chance of spotting opportunities to open trades or know when to close them. Remember, unless you consider burning cash as a hobby, day trading isn't going to qualify as a hobby. To make it work, you have to approach it like a full-time job. Number 8. It requires experience. So, you know a bit about how the stock market works? Nope, that's almost certainly not enough. Think you can buy a couple of books and get going? That's a good one. Take an online course somebody spammed you with? Stop, you really got us laughing here now. The people you're going to be competing with are highly trained and experienced. You'll need to be as well. One way you can get experience is by trading in a dummy account, which you can sign up for on a lot of financial websites. Get going with that and don't even think about real trading until you've done several months or even a year with a dummy account. Number 9. You'll want to be good at technical analysis. You know those green and red sticks on financial charts? As insiders call them, candlesticks. Reading those is what they call technical analysis. Knowing what they mean, how to recognize patterns, and what signals they're sending you. Pro traders use them to predict what markets are going to do, and you'll need to learn about them as well. There are plenty of courses out there on how to use them, and check reviews of those courses before you sign up for one. Don't just go with the first one you're spammed with. Number 10. You'll want access to real-time financial data and multiple news sources. You're going to want news sources that give you the latest announcements that are going to affect the markets. News about corporate earnings, interest rates, company scandals, mergers and acquisitions. All of these can send prices shooting up or down, and that's where a lot of your opportunities will come from. So, you need to be the first to know when something important happens. When we say first, we mean not a time lag of a few seconds. The pro traders are going to be making decisions in a split second, and to compete with them, you have to react just as fast. Number 11. You'll want to invest in analytical software. Something else the pro traders have, and something you should look into at least a little bit. Things like software that interfaces directly with the brokerage and lets you make instantaneous trades. Automatic pattern recognition to identify indicators of what direction an asset is going to go in. Backtesting, which allows traders to see how a certain strategy would have performed in the past and helps them to predict how it will perform in the future. Sound complicated? Well, nobody said day trading was gonna be simple. Number 12. You'll need discipline, and you'll need to keep emotion out of your decisions. Day traders who make money use tried and true strategies and follow them by the book. Hesitate for a few seconds and putting those $5,000 on a trade, you may have lost the opportunity. You need to be sure of your strategies and disciplined in following them through. It doesn't mean you'll win every time, but for successful traders, it will help them make more wins than losses. And for a lot of people, keeping emotion out of it isn't easy when your money is on the line. That's one reason day trading just isn't for everybody, no matter how market savvy you are. Number 13. You'll probably need to use leverage, which is very risky. Leverage means borrowing money to make trades. If you put $1,000 on a trade and it goes up 10%, you've made $100. But if you use leverage and along with your own money you borrow, say, another $9,000, you can give back what you borrowed and you've still got $500 profit. What about the reverse? Well, it ought to be kind of obvious, but we'll spell it out for you anyway. You've borrowed $9,000 along with your $1,000. If it goes down by 10%, your trade closes. You automatically pay back the money you owe and your $1,000 has disappeared. No option of waiting for the price to go back up. Yep, you're left with nothing. The truth is, if you want chances of making good money in day trading, you'll probably need to use leverage, and it's something else that makes day trading inherently risky. Number 14. In US law, you'll also need $25,000 in your account to do it. Different countries have different laws set out by their financial authorities. Before you get into it, find out what they are. In the USA, in order to make 4 or more day trades within a week, you need to have at least $25,000 in your trading account. Got that kind of money you can afford to blow if it all goes wrong? Well, be our guest. If you'd rather be sure of holding on to your $25,000, well, maybe day trading is not for you. And while we're on the topic, Number 15. Day traders should only use risk capital. Risk capital means money you're prepared to lose. Remember, you're up against big financial institutions like insurance and pension companies. They have their investments over a spread. That includes most of their money in low-risk assets like index funds and mutual funds. Some of it is medium risk like individual stocks, and a small part of it is the high-risk end. That's what their teams of day traders take care of, which means that for those huge companies, the money that they day trade is risk capital. They can afford to lose it because they've got their gains covered elsewhere. Most individuals aren't in such a comfortable position. So, Aluxers, what, if anything, did the words day trading mean to you before clicking on this video? And has this changed any of your opinions about it? Let us know in the comments. We can't wait to hear from you. And of course, we've got a bonus for those of you who stuck with us till the end. Day trading isn't necessarily a bad thing, but for most people, it's not a good option. Now, let's be clear, we're not saying that everybody who day trades is a nut job or that day trading is the work of the devil. For financial institutions and a small number of high net worth individuals, it's a rational thing to do, and credit where credit's due. Day trading actually does a lot of good for markets. Lots of short-term trading means imbalances in the market get corrected faster, and assets are more liquid or easier to buy and sell. Everyone involved in the market benefits from that. But the truth is, day trading only makes sense for a very small number of people. If you're at the stage of choosing a career, you should look into becoming a day trader with a firm. You'll be trained by pros, and maybe after a few years, go it alone with the experience you've built up. Still want to do it yourself from home? Okay, it's not impossible. Some people make money from it, but very few. So ask yourself, have you got $25,000 plus that you can wave bye-bye to without any regrets if it all goes wrong? Have you got the nerves and discipline to gamble with that kind of money? Can you approach it as a serious full-time job and invest in the training and software? Oh yeah, and the patience to spend months practicing on a dummy account first. If the answer to all of this is still yes, we wish you the best of luck. Hey Luxers, we hope you enjoyed this video. If you did, be sure to click on the subscribe button for more quality content every day.